While almost all the attention following Tesla's third quarter's earnings has been around gross automotive margins, I'm surprised just how little attention there has been on Tesla Energy. And also, there is one more aspect of Tesla's business that people are mostly not aware of. And to set the scene, let's go back to the start of 2019, where Tesla had $2.3 billion in cash on hand, along with $9.8 billion of long-term debt, and in need of more funds.
Tesla's just 2 days away from a nearly $1 billion debt deadline. The electric car maker has the money for the payment, but the bill could put them in a cash crunch.
And let's look at the credit cost of these bonds. These bonds yield over 9%, okay, over 9%. So that means if Tesla wants to go back into the market, this is a yield to maturity. If Tesla wants to go back into the market to issue more debt, it may be difficult, but they're going to have to be paying over 9% to do that. So it's difficult to get a deal done, but it's also, remember, difficult to service debt when you have to pay 9%. Just as a reference, if you think about GM or Ford, if you look at similar senior unsecured bonds, they're trading in half the price, 4.5-ish or so. So this should be really a concern for Tesla shareholders about how poorly Tesla's debt is trading.
And that's when we get into this sort of vicious cycle where the stock goes down, the bonds trade badly, the cost to service that debt goes up much more, and that's even more trouble for the company.
Well, the company's gross debt to market cap has never been higher.
In less than 5 years, Tesla's cash on hand has gone from $2.3 billion to $26.1 billion. Meanwhile, their long-term debt has gone from $9.8 billion down to $2.4. So as we saw back in 2019, Tesla had to pay over 9% in bonds that they issued, and now that they have almost paid off their long-term debt, Tesla's interest expense was down to just $38 million for the last quarter. In comparison, with Tesla's ever-growing cash on hand and rising interest rates, Tesla earned $282 million in interest for the quarter. Now, get this, if we combine these two charts, we can see that Tesla paid hundreds of millions in net interest payments throughout 2020 to 2022, but now Tesla's interest was a positive $244 million for the quarter. Annualized, this is almost $1 billion in pure profit for the company. And keep in mind, some legacy auto manufacturers have debt loads that are in excess of $100 billion, and just about all EV startups are currently unprofitable and having to raise debt at high interest environments. Meanwhile, Tesla is very well positioned to handle any economic uncertainties going forward. And keep in mind, Tesla's Energy posted $500 million of profit for the quarter as gross margins increased to 24.4% in Q3, while services, which included things like supercharging, insurance, and part sales, is also contributing to Tesla's profit. I mean, in the third quarter, service profit annualized comes out to $500 million of profit for the year, and this number is only trending up. In the next episode, we're going to look at Tesla's gross automotive margins, which have really softened over the last few quarters, and some thoughts on whether Tesla should advertise to alleviate this constraint. So to conclude, more and more aspects of Tesla's business are becoming profitable. And Tesla is not done, as they are also working on other projects like robotaxis, FSD, Dojo, and Optimus, to name a few examples. So what will Tesla's earnings look like if they can scale these projects successfully and turn them profitable? Something to think about. You could say Tesla is like a bunch of startups.
Well, yeah, I was thinking about this today. I mean, Tesla is probably in excess of a dozen startups effectively in Tesla. Every major product line is a startup. Every big new plant is a startup. And sometimes, frankly, we have to learn the lesson a few times before it sinks in. Even things like service and sales are startups. Other car companies, OEMs, they don't own their sales and service. So we have to create our service network. We have to create our sales and delivery network. We have to do this in, 40 countries. And the whole autonomy thing is a startup. Designing our own computer chips was a startup. Obviously, sales is a startup. designing and making our own power electronics for the drive units, designing, manufacturing our own motors, chargers. The supercharger network is a startup. I think that people just don't really understand about Tesla is that it's a whole chain of startups. And they're like, well, you didn't do that before. Yeah, but we're doing it now. And I mean, I think so far we've maybe been a bit slow with some of the startups, but I don't think we've had any of them fail. So far so good.
So I hope you enjoyed that video, and as always, all content in this video is simply my opinion only and not financial advice. So till next time, have a great day.